And while headlines often say prices are crashing here in Germany, the reality is actually more nuanced. Now let's talk about the interest rates at the moment. Mortgage rates in Germany went from historic lows of 1 to 2% to about 4 to 5% over the past 2 years. If interest rates fall in the future, there will be more competition again, pushing prices even higher. Hey everyone, welcome back to the channel. My name is Hans and I help expats find, analyze and invest in real estate here in Germany. If you're interested in personalized support, you can book a consultation with me. Just reach out to my website, germanrealty.org/services. Today I want to tackle one of the most common questions I hear lately. Is now a good time to invest in real estate in Germany? And for this I'll break down the current market situation, what's actually happening with interest rates at the moment, what's happening with prices, and what I personally think the best strategy is right now. First, let's look at what's going on in the German real estate market. Over the past few years, we saw massive price increases, right? Especially between 2015 and 2022. Then with rising interest rates, the market slowed down. Prices have dropped slightly in some regions, stayed stable in others, such as in big cities, and some properties are taking longer to sell. Especially one-family houses are usually taking a longer time to actually being sold. Now let's talk about the interest rates at the moment. Mortgage rates in Germany went from historic lows of 1 to 2% to about 4 to 5% over the past 2 years. Right now we're at a level where you can get a 10-year fixed interest rate period for an interest rate for roughly 4%, I would say, which means that over these 10 years your interest rates would be locked in and you will always only have to pay 4% in these 10 years. Most of the time, after those 10 years are over, you will then have to refinance and get a new interest rate. And due to this increased level of interest rates, the prices have actually gone down slightly. Again, depending on the region, whether you're buying in a rural area or in a city, but overall it could definitely be said that the affordability of a mortgage has dropped. And now what we can see on the market is that some people are still waiting for the interest rates to go down again. But honestly, nobody really knows when or if that will actually happen. Rates might stay high at this level for a while or fluctuate depending on inflation and also, of course, the European Central Bank's policies. The key takeaway, if you're buying long term, interest rates are just one factor in the bigger picture. Now let's talk a little bit more in depth about the prices. By prices, we actually mean the purchase price of a property, right? And while headlines often say prices are crashing here in Germany, the reality is actually more nuanced. In some suburban or rural areas, prices have actually come down between like 5 and 10%. But in strong city centers or areas with high rental demand, prices are relatively stable, right? Since I've been following the market specifically for Freiburg, and the surrounding area, I can definitely say that prices haven't really dropped in Freiburg, especially for smaller apartments which are really close to the city center. Also, many sellers are still not yet willing to accept discounts on their properties. So while you might be able to negotiate a bit more compared to, let's say, 2021, the big collapse some buyers hope for hasn't really materialized and likely won't because of the chronic housing shortage here in Germany. And that leads to another factor which I would like to discuss now. One important reason I still like real estate now. Rents in many cities are going up and there's simply not enough housing, while population growth continues in urban areas. And I think this trend will even prolong over the next couple of years, right? It's going to take many more years until new apartments are being built and you can see that effect on the rental market. So even though interest rates have risen, you can often increase rents to offset some of the higher financing costs, especially when tenants change. And that actually shows that rental properties can still produce solid long-term results. Now let's talk about why waiting might be risky as well. A lot of people think, I'll just wait until interest rates come down or prices crash. But the truth is nobody actually knows what will happen and when. If interest rates fall in the future, there will be more competition again, pushing prices even higher. Also, in the meantime, you're missing out on potential rent income and paying someone else's mortgage if you continue to rent yourself. In the long run, I think buying solid properties, especially ones that are, let's say, cash flow neutral, tends to outperform waiting and trying to perfectly time the market. Now, what would I recommend to do? I'd say focus on the fundamentals. Look for well-located properties with a strong rental demand. Make sure that the numbers work today with the current numbers and assumptions. And don't gamble on lower interest rates in the future. If the deal makes sense from a financial perspective today with the current interest rates, then make sure to take this deal. Also, if you can, negotiate, but only in rural areas. areas. Sellers might be a bit more flexible than they were a few years ago, and you might be able to get a slightly better deal. But if it's a really good deal already, make sure not to negotiate at all. Especially in big cities with a strong housing demand, trying to negotiate can knock you out of the race entirely. In cities like Freiburg, I'm now seeing more and more buyers even bidding more than the actual asking price to secure a deal. So keep that in mind. And finally, remember, real estate is a long-term game, right? If you buy right, hold it for 10 plus years and keep a buffer for repairs and vacancies, you're building wealth and security, regardless of what the market does in the short term. So finally, is now a good time to invest in real estate in Germany? My answer is yes. If you do your homework, run the numbers and buy carefully. Real estate is never 100% risk-free, right? You will always have to make a trade-off, but it's still one of the most stable ways to build wealth here in Germany. And that's it for this video. If you do have any questions, drop them down below in the comment section. Again, if you need personalized support, make sure to visit germanrealty.org/services. And if you haven't done so yet, make sure to hit the notification bell here on YouTube to not miss out on any videos I publish. Thanks for watching, and I'll see you in the next video. Take care. Bye.